Morning, guys, and thank you very much for joining me on the Crypto Minute. And for those that have come over from the previous webinar, thanks for joining me. My name is Russell Shaw, Senior Market Specialist at FXCM. My email address is rshaw@fxcm.com, and today is Wednesday. It's the 8th of June 2022. Just going to bring up our high-risk investment warning. I'll keep this on screen for a few moments. And I just want to we're certainly going to get into Bitcoin. It's moving, and we need to understand why it's moving. Before we do that, Rob asked a really good question, which is as follows. Russ, just a thought. In the current, I would suggest that it's slightly different. Inventory levels are depressed due to limited supply and scarce transport. So the answer to that, in my opinion, Rob, is yes. That's 100%. That's 100% correct. Hey Zanetta, nice to have you again. But that's not what Target is saying. So they saying they have not limited supply. They saying they've got an excess supply. So why would they have an excess supply? They're not selling it. They're not selling it. So they've got an excess inventory, which so they that's so slightly different there. We know that there are supply side shocks that are leading to inflationary pressures, specifically in your cost of sales, specifically the cost of sales part of your income statement, right? But what Target is saying, it's the sales level where they're getting hit. The sales to inventory is out of whack. Does that answer that question? I hope I'm on the same wavelength. All right, let's take a look at Bitcoin. If there's any questions, guys, you just go ahead and type those in. Okay, Anna has got a really good comment here. Let me just bring up the Bitcoin. So we're going to get into Bitcoin in a moment. Just let me go through Anna's comment. I think it's definitely worth reading. And then we will take a look at some of the cryptos. So she writes as follows. Retailers spent, and this is according to Bloomberg, retailers spent the entirety of 2021 and looking at empty shelves, wondering whether any of their LOL. Let me. Okay, I'm just going through it. So they're looking at empty shelves. So they got a little impatient and started to place orders, hoping anything would arrive. So now we've got an excess of inventory swimming in a sea of mediocre merchandise, just as Jamie Dimon contested an economic hurricane approaches. Target is choosing to clear its racks through sales in the hope it can acquire new inventory that customers actually want to buy. And her LOL, yeah. So I was thinking if it was an LOL, sort of a laugh out loud. I got you. The point is, it looks like there has been a market increase in the sales to inventory ratio. Again, I think that's serious. So Cobb Douglas looks at labor. So we need to look at labor. Cobb Douglas looks at capital. Capital basically means investment. Got to look at that. But now inventory is another huge piece of this puzzle, and it just every day it unfolds. Now, at some stage, by the way, just going back to what Anna said yesterday, because I think it's an important point to make. She spoke about a catalyst. So we got to be careful here, and sort of at reverse catalysts. If I'm just making up a phrase, but what I'm saying is, When we start getting negative news and the market stops falling, then we've got to ponder, well, has all the negative news been discounted in? I don't think we're there yet, and I think that's where COPOC is going to help us. But again, that's something that we will address in the coming days as this whole macroeconomic situation unfolds. Nice comment there. All right, let's just take a look at Bitcoin. So just to get an idea of the situation, we'll start from a top down, and take a look at our trend. Okay, peak, trough, nothing changed there. This is a little bit odd here, okay, because there is a little bit to say about the movement here. I'm just going to keep the trough here. I'm quite happy with it because I think it is in the spirit of the trend. Lower peak, okay, lower trough. This over here is clearly a higher trough, but it actually turned out to be a pattern. It actually turned out to be a pattern, a 2-3 correction. So I think in terms of trend, I think we've got it right here. But the big danger here, is the momentum. Now remember, we're looking weekly, hey? So this is longer term sort of primary trend stuff. This is what happens because of the underlying fundamentals. The daily, the 4-hourly, the hourly, that's where we start getting into sort of your day-to-day sentiment. Weekly, not so susceptible to that. So we've got this lower peak, lower trough. The momentum firmly in the bearish area. Okay, we're in 20. If we hold that 20 area, we're going to see real erosion of price here. We can see what happens if you stay over 80. That's where you get a nice swing up. Imagine if you stay under 20, you're going to get that swing down. Now, in terms of classical technical analysis, we can say, well, this looks like a top. Okay, so if you had to put your pattern in, well, you can probably make an argument for a head and shoulders top here. This left shoulder is a bit weird. It's a little too emphasized to be a conventional head and shoulders, but I think there is an explanation for that. And in my opinion, the explanation is, well, you have to bring up your RSI to get the full story there. And the story here is that left shoulder was effectively formed under a lot of emotional exuberance. So you can see we just stayed overbought for so long. It's not surprised that there's a skew on the left side of the pattern, because there was just I think too much emotional trading taking place here. So if that is so, and of course it remains to be seen whether this is a top or not, the head and shoulders target here, which we'll just put it in, does suggest that there is still a lot of pain to come. Now, I don't think that targets are all that useful, but because they are either going to be hit or they're not going to be hit. But I think the takeaway from that is that the top's completed, and if it's completed, there is certainly I think a downside probability bias as opposed to an upside probability bias. So I think that's the big takeaway there. Now, we've been obviously talking technicals. Technicals without the fundamentals are no good. We've got to understand. Well, what is the reason that cryptos and Bitcoin could potentially fall towards target. And I think the first point to make is the complete loss of confidence because of the capitulation of Luna, and Terra, and all these coins that are meant to be pegged to the dollar. I think that did a lot of damage in terms of confidence. So that's one area we can look at. Another area that we can look at is regulation is coming. Whether we like it or not, it's coming. Is just it's slow. So in that regard, there was 2 senators in the US, a Republican and a Democrat, by the names of Loomis and Gillibrand. And yesterday they had released a long-awaited bill, effectively to look at regulating cryptos in the US. Now, the bill itself, I think, actually is less of a headwind against cryptos than is potentially possible, because they seem to be giving oversight to the CFTC, which is the Commodity Futures Commission. So there's not a sort of a separate body, so they're kind of lumping it under futures trading. With that all said, so we've got now the loss of just confidence in terms of sentiment. We've got regulation. I don't know what's going to happen with this particular piece of legislation or this bill. It could be sort of filed away. It could just. But the point is, it's now a theme that we're hearing every week. So regulation seems to be certainly on its way. Most important for me is, of course, what's happening on the ground. And when I say what's happening on the ground, I'm talking about the economics that drive the supply and demand unhindered, let's say, by regulation. And what I mean by that, it comes down to what's happening. Let me put in the, I don't have my watermark here. Let's just put in the watermark. So again, I think you guys would know where I'm going with this. We must understand that Bitcoin, it's not an instrument in isolation. It's a pairing. Okay, it's a pairing, and it's very much in the convention of a currency pairing. And what I mean by that, Bitcoin is a base currency, and I put currency in sort of quotation marks, and the US dollar is the quote currency. So it's a base to quote. Well, it's the same as euro to US dollar or pound to US dollar or any currency pairing. Well, here you've got Bitcoin to US dollar. So the fact that there is a base quote relationship going here, or a base counter currency relationship, means that, well, it's affected. It must be affected by forces on both sides, because whatever is going to affect the dollar must, by implication of the currency pairing over here, must affect Bitcoin, and vice versa, by the way. So whatever happens. So now you've got, I think, the Bitcoin. I think this is where the regulation hurts. I think this is where the loss of confidence in terms of the collapse in the in Luna. This is where that's getting felt on the numerator side. But as we've mentioned many times before, it's also the US dollar which is going to affect this. Now, remember, technically speaking, we've got a very scary looking chart. We're in downtrend. Of that, I can say for sure, because there's downtrends have a definition. This meets the definition of downtrend. This meets the definition of downtrend. Low peak, low price. So in downtrend, I can say for sure the momentum is weak. I don't know that. The oscillator, which is a mathematical derivation of price, telling us it's weak. Okay. But now let's just take a look at the dollar side. And this is, to me, again, hugely underestimated. It's not only underestimated in the crypto environment. I think what is hugely underestimated is exactly what I said yesterday. It's the normalization of the balance sheet. That normalization of the balance sheet has a ripple effect. It's going to affect everything, okay? Everything, which includes our cryptocurrencies. It has to, okay? It cannot not affect it. Why? Because we've got a currency pairing here, okay? So you can be a crypto bull, that's fine, but we can't ignore this side. And then if we can't ignore this side, the question is, well, which side's going to be the stronger? And there is no ways, okay, the numerator will be able to compete against the denominator in an unwinding of $9 trillion. Let's call it $5 trillion. I'm not sure where they're going to end, but it's a no contest. Okay, it's a heavyweight versus a lightweight. So that is huge. It's huge, and it's underestimated. So let's just take a look at the US 10-year. I want to go to the weekly here, and what we have is a yield now over 3%. Okay, and I don't think, as I said yesterday, I don't think it's a factor of where the Fed decides to. So there's something called the terminal value of interest rates. The terminal value of interest rates is, well, what is the peak? What's the apex in terms of this current interest rate cycle? And that peak, that apex, that's the terminal value. So whatever the terminal value is in terms of the minds of the Federal Open Market Committee, well, that's all good and well. Well, what about your reduction of your balance sheet, which will have an effect on interest rates? It has to have an effect on interest rates because we mentioned before, it's the principle of scarcity. Scarcity, that's the number one problem in economics. You've got scarce resources. What's the best way to allocate those resources? Scarcity is adjusted via price. The allocation is always, the adjustments are always made via price. What's the price of money? Interest rates. Okay, so interest rates, okay, are I think still very much in flux. And if I'm wrong, but the point is quantitative easing was a complete unknown, which resulted in 8% inflation, 11% on the PPR, but that wasn't because of quantitative easing. Well, what's quantitative tightening going to do? It's a huge unknown. Okay, so that is a huge worry. Okay. So Anna's saying she's got a YouTube channel here. I haven't watched it. I'll paste this. Again, I haven't watched this, but it's a YouTube channel just saying why Luna Terra was doomed from the start. All right, so Patrick Boyle explains the different stablecoins really well and why Luna Terra was doomed from the start. Okay, just let me know if you guys have got that. I haven't watched it, so I'm not sure what it says. Regulation would never have allowed Luna to exist. Yeah, that could be, again, I would suggest that's probably correct as well. But I still think, you know, the balance sheet reduction is really what we've got to focus on. And again, I would reiterate, not only in the crypto space, I think this is really something that maybe I'm overplaying it, but in my mind, I don't see how it can be ignored. Let's just bring this up again, just to highlight what's going on with the balance sheet reduction. Yeah, exactly. Quantitative easing, Bitcoin up. Quantitative tightening, Bitcoin down. That's my reading of it. Subject to correction, but that is my reading of it. And let's just take a look at it. Economics again, 101. I think that demand and supply models are fantastic for any type of analysis. Remember what we said, that money supply has to be vertical because it's fixed. It's a fixed amount. This is your money supply. This is your money demand, okay? And we're just going to call this the quantity of money. I'm just going to go QM. And this, we're not going to put it as price. We're not going to put it as price. We usually have price on the y-axis. We're going to call it interest. It's the same thing. Interest rates are effectively the price of money, okay? And now, let's just say we're at 3% here, okay? Right. Well, when there's quantitative tightening, you're effectively taking money out the economy. How are we doing that? The Fed is liquidating assets on its balance sheet. It's selling assets on its balance sheet. Those assets are getting paid with cash. That cash is going into back to the Federal Reserve, and they're just putting it in their vault. Boom, it's out of circulation. Okay. So the money supply is coming in, right? Now again, we've got 9 trillion. We've got 9 trillion bucks on their asset side. Okay, so we basically need to bring in. I can't remember exactly where we started, but I think we started just under 5 trillion. I think we started under 5 trillion in March 2020, so we kind of doubled up there. So what happens if we keep going this way? And that for me is the big unknown. That for me is the big unknown. So again, if you are a crypto bull, that's fine. Okay, this is your space. You can do all your analysis here. This is your space. But don't forget this part. Okay, don't forget this part. And then you've got to say, well, which one's going to be stronger? The market forces on this side, or the market forces on this side? And to me, it seems like a freight train against a motor vehicle. You know, it doesn't seem like a competition. Let's go down to the daily charts here. All right. So we can see that now your Bollinger's are starting to contract on the daily. This is interesting. Of course, we want to see if you are a crypto bull, you want the expansion to move up that way. However, if the downtrend plays out, if the reversal, that big gigantic head and shoulders top plays out, if the contraction in money supply plays out, okay, and we get an expansion to that downside, it could be really vicious. So just caution, absolute caution, okay. And then what we want to do here is go down to our hourly chart. This is where our timing takes place, and you can see we've got a trigger 1, we've got a trigger 2, and I think that the movement here would be really painful. Okay, really painful, because that's where the magic happens. Either under 20 or over 80. That's where your swings take place. So here's a swing over here. There's a swing there. Just trying to find a substantial one. We've been drifting sideways for a very long time, so I can't. Let me find one on the. Let me find one on the daily. That should be easier. Yeah, you can see. Okay, hangs out in the lower quintile. Capital losses abound. Okay, so that's sort of the I guess assessment in the cryptos. It's now coming down to numerator versus denominator. Okay, which one do you believe in? I think that you've got to be very careful not to discount just how powerful that denominator is. All right. Just see. Are there any other comments? Again, so it does seem to me. So Anna says it looks like cryptos may be in for a long, cold, hard crypto winter. You know, that's my sort of feeling based on the analysis. We know that variables are consistently changing. Consistently, markets are efficient, information is inefficient. So we're just going to have to be on top of this analysis, Anna. But right now, as you and I have this conversation, it does look as if they are in for that long, cold, hard winter. Any comments, guys? Any other comments? All right. What we'll do is we'll wrap up here. I'll put everything on the website and on Telegram. Have a great day ahead. Have a how it's saying this talk of Bitcoin going down to 20,000. So I'm just thinking. So let's move away from targets. Okay, so I put targets in articles because it tends to attract readership. People like being being told kind of where the cryptos are what they're going to be priced at. Look, it's impossible to forecast with any sort of accuracy. So the target on a logarithmic scale is 15,800. If it hits it, you know, I'll be the first one to tell you, see, I told you so. Truth is, it's luck. You know, we had market commentators calling for 100,000. Now we've got guys calling 20,000. What we've got to do, I think, Howard, is effectively watch the trends. If we get a higher trough followed by a higher peak before 20,000, well, then the chances of getting to 20,000 probably have diminished substantially. But if we stay in our lower quintile, well, then 20,000 becomes a distinct reality. It's not that far away. And then my target of 15,000 becomes a reality. If it gets hit, I promise you it's not because of this measured move. Okay, it's just because the market decided that's what it should be valued at. The statements drive readership 100%. There's no, I can see it in our stats, you know. So we look at our articles. The articles that do the tend to do the best is where we put forecasts in, and where we so the idea of a forecast is incredibly enticing, incredibly interesting, but it's very, very rare that a forecast is going to be consistently hit. Hey, Rob says, when it hits 15, it won't be luck, it's because I'm a legend. Yeah, I agree, Rob. With that, let's end here, guys. Thank you very much for joining me this morning. I appreciate it. We'll chat tomorrow morning. You've got my email address if you need a chat. Cheers, guys.